Hi traders, welcome back to Simply Forex. Lovely to have you here. Today's vid, we are going to focus on money management and the things you must know. Yeah, if you don't know these, stop trading this minute. Okay, I talk to traders all the time. It amazes me how they don't have a grip of their money management. It is one of the most important things for you to succeed at this crazy game of trading. All right. So we're going to look at money management today. Okay. So let's imagine, this gray zone up here is an area of resistance, and we want to enter at this zone. Okay. Then we get this candle we can enter from. Yeah, it would have been a good trade. Or we can get this candle we entered from. Would have been a good trade. Okay. So let's say for the first candle, we enter here. Okay. And then put our stop here. Okay. This is our risk. Okay. Bear with me, guys. I know you know this, but we have to break this down logically. Okay. And then price comes back up, and then we enter on this candle. Okay. This is our risk. Okay. Okay. And in terms of our account, we need to understand, first of all, what we are willing to risk per trade. All right. So let's keep the math simple. You have a $10,000 account. Okay. And we are willing to risk 1% per trade. 1% per trade equals $100. See, I am a genius at mathematics. Still, guys, bear with me. Yeah, you need to know this. So each trade, we're willing to risk 1%, which is $100 on a 10K account. All right. So this risk here should equal $100. This risk here should equal $100. Okay. But you need to know what your entry amount will be. Okay. Because in the first trade, guys, this first trade, we get in at 50. Our stop is, say, 75. So this risk is 25 pips. Okay. This risk is 4,100. This is 60 pips. All right. So these figures will now make sense down here, guys. So, like I say, you must know this. You need to know what size you're going to enter, what lot size you will enter. So basically, guys, on this first trade, your risk is $100. Yeah, here, $100. If we look at the numbers now, divide it by 25, which is the amount of pips, you will now be entering a $4 trade size, lot size, okay, for you to maintain that 1% risk. On this second trade, guys, we're risking 60 pips, but it's still 1%, which is $100. So we do $100 divided by 60, and your trade size will be $1.70. Okay, so you must know this, guys. You need to know what size you're trading with. You cannot enter all trades with the same size. You have to adjust it according to your risk. Okay, so that is part one of risk management. Okay, now part two. So part two of money management, risk management. All right, before I start part two, guys, if you're enjoying this vid, then come join us, subscribe to the channel, smash the notification button, smash the like button, smash a plate. Don't do that, but join the channel, guys. All right, we've also got some other cool things. We've got free Discord, we've got VIP Discord, so join one or both of them. We've got mentorship program where I coach you one-on-one. We've also got YouTube membership if you would like to support the channel. And we also do live streams every day, 8 a.m. New York EST time. So if you would like information on any of those wonderful things, then all the information's in the video description, guys. Right, now we are going to look at risk to reward. Okay, and it is usually put like this, R.R, risk to reward. Okay, so we've got trade number one, we've got trade number two. We're still looking at the same trades, guys. So I am risking 25 pips on this trade, and this yellow line here is my target. This is my take profit. Okay, and that is at 75 pips. Okay, and my entry is 50. So basically, guys, from here to here is my reward. Okay, and this is 75 pips. Okay, so my risk, if we do it like this, yeah, if we do RR dot RR, my risk is 1. Okay, and my reward is 3 times that amount. If you times 25 by 3, you get 75. So my reward is 3. I'm risking 1 to get 3 on this trade. Let's look at the second trade. So I am risking 60 pips. My target is here, and my target is 0980. My entry is 1.1040. So that is 60 pips. Okay, so from here to here, this is my reward, and this is 60 pips. Okay, so for this trade, trade 2, my risk to reward is 1:1. I'm risking 1 to get 1. Whereas this trade, trade 1, I'm risking 1 to get 3. Obviously, the higher the risk to reward, the more desirable the trade. Yeah, makes sense. So you must understand that concept as well, your risk to reward, guys. And also something very important about risk to reward is understanding how many times you need to be correct. Okay, so if we look at it like this, so if you had 1:1, yeah, and you had a losing trade and a winning trade, you need to be right 50% of the time. You need to be right 50% of the time to break even. Yeah, BE, break even. If your risk to reward is 1:2, yeah, and you had a loss, and a win, yeah, you need to be right 33% of the time, yeah, to break even. Okay, this is very important, guys. You must all know this. Okay, and now if we go to trade number 1, if your typical risk to reward is 1:3, yeah, let's say you had a loss, and then a win, yeah, you only need to be right 25% of the time to break even. Okay, and so on, 1:4, 1:5. So understanding firstly what you're risking in terms of percentage of your capital. So you were risking 1% of a 10K account, we were risking $100, and calculating how much that translate to in terms of how much you will enter in on the trade. Very important. And then your risk to reward, understanding that and knowing how many times you need to be right for you to break even. Okay, so Guys, I just wanted to show you this. It's very important that you understand money management and this risk concept. So important, that like a pillar of trading, yeah, and successful trading, guys. So again, I hope you've enjoyed this video. If you have, then come join us, subscribe to the channel, smash the notification button and smash the like button, and I will see you next time. See you later, traders.